let's say.
Can I get a mic test from? Can you go back to Discord, please?
Just a second. Everyone can see, so don't worry.
Hi guys, hello, hi TikTok. Anyone who can tell me loud and clear, thank you so much. We're seeing perfect, very helpful. Not heard about ALMU, don't worry, I'll talk about that. There's plenty of stocks in the book, not just that one.
So, yeah.
There we go, right. I'm just going to wait for everyone to join us, guys. We've got TikTok live, we've got my community.
Instagram, YouTube, Facebook.
Instagram, YouTube, and Facebook. We are going live, our monthly live. And the format will be, I'm going to go through the talking points that I need to update you guys on.
The Senator
Apex and the market, and then
we'll
do a Q&A
she called on the administration
so
to make E15
I will
available
attempt
to drivers
to respond
this
to
summer
as many
to curb
questions as
fuel
possible.
costs.
Obviously, the priority will go to Apex Trading.
Everybody can come into the Discord.
If you want to come into the Discord, you will obviously have priority.
And everybody can.
And if you want to actually join Apex, you will most definitely have priority.
And in commodities news, Putin signs an order limiting gold bullion exports.
All right, welcome guys, welcome to my Apex. Guys, I hope it's difficult to pick the right time of day for everyone. I realise that everyone's getting home in the UK, putting kids to bed, or in America, hopefully it's kind of midday for you guys. And if anyone's in Asia, respect and shout out to you because it's very late for you. So I'm going to just wait for a few more people to join. I've got a strong hello Apex. Look at this crew. Look at this beautiful, beautiful crew. I love it.
Just a reminder to everybody that you can join us live on the Discord and join us up on stage on the Discord.
Yeah, so Jacob just reminded me, if you want to join the stage on Discord, are we going to do that? Where people can ask questions?
Absolutely, of course.
Yeah, so when we get to the Q&A, it's going to be, you can join the actual stage, come on camera, and we can talk face to face if you want. So that will be good. Right, it's 6:02, so I'm going to kick it off. Obviously, people are still joining, but I'm going to do my best to keep things in motion. So let's start with a market update and a bit of a sort of wrap on what's going on in the world. It's hard to gauge, who's following exactly what I'm saying. Those obviously in the Apex community know a lot more than what you guys on TikTok know, but this is obviously a very, very unique and complicated time to be managing money, whether it be at a professional level or a retail level. Managing money is managing money, and what I'm trying to do in my community is show people how to manage money, however big or small, in a professional way. In other words, have a book that's position sized correctly, risk adjusted correctly, and ultimately can weather any market. I don't care whether the market's going up, down, or round in circles. As long as it's moving, we can make money. So it's not, and that is something which has been a very steep learning curve for a lot of people, I think, getting familiar and getting comfortable with shorting things and hedging a book and all these things. But that's precisely why I set up Apex, in order to be able to show people how to do this. And I got bored of speaking to institutional hedge fund managers, quite frankly, because it's a thankless job. Speaking to the retail community can be frustrating at times in the social media world, but ultimately it's very rewarding. There's a lot of good people, there's a lot of very smart people, there's all different levels of experience, but ultimately the people who want to learn and who are passionate about markets are my favorite people.
And Levitt says there is some misinformation out there.
It may seem like there's a lot of ego in this game, especially from people like me who have done this for a very long time, but I can guarantee you there really isn't. Because I've been slaughtered many, many times. I've lost a lot of money over the years. I've learned a lot of big lessons over the years, and that's how you learn. No one was there to hold my hand and teach me, though, and it took me a lot longer than I hope it's going to take my community. I'm going to fast track their understanding. Those of you in the social media world and TikTok, thank you so much for joining in. You get little snippets, but I can't obviously give you the full bells and whistles for obvious reasons. But the market right now is
surcharge applies
if you're a trader and you're nimble and you can short and you can move in and out of things very quickly, it's quite fun. You know, my book, in terms of my net exposure, my book on a notional level can be $15 million. It's about 10 at the moment.
Looks like
so
a
I've got
small
about
dip in
I've got
Amazon
quite a lot
as
of
well,
cash
but
ready
the
to go on the
stock recovered.
sidelines. But on a net exposure basis, it's up about 25% or something like that. It was up more. It's been I lost a little bit over the last week or so, but it's nicely up. Most people are not up
In the
this year,
banking space,
especially in the big hedge fund world, especially the multi-strat world.
To focus on
Hedge funds like
PE
Balyasny
exits.
have had a very, very tricky time. They were down 3.5% last month, which of course is a lot if you're managing $30 billion. So it's been a volatile but good start to the year. And the best part about it is that if you know how to manage a book in any market, you can feel comfortable on any day. It doesn't really matter. You wake up, and you're just relaxed. It doesn't matter what's going to happen that day. You're going to be, you adapt to it. You've got your hedges in place. You've got the right positions, and you make money. So, and it's been such a wonderful experience for me watching these people in my community learn exactly how that works. Now, it is a very tricky situation. My book is currently set up for a de-escalation trade, right? I've got two books. I've got a macro book and I've got an equity book. The macro book I only started about 4 weeks ago. And it's a very difficult time to start the macro book. I've kept it small, I've kept it simple, because so I'm not trading FX I'm not trading rates, which of course are the main macro products, for multiple reasons, but mainly because I'm trying to keep it equity focused, equity and commodities. So I can trade all the commodities. I've been shorting oil gently, because my base case is a de-escalation and the fact that the world is oversupplied with oil if the Strait of Hormuz is open. Now, we all know that the Strait of Hormuz is currently not open, but there's a lot of nuance to it. There's a lot of things going on behind the scenes. Saudi Arabia, during the 90s, when we last had an oil supply shock crisis, they set up these pipelines which go straight to the Red Sea. They can pump quite a lot of oil there. Obviously, the IEA has committed 400 million barrels. There's a lot of things going on. So it's a time frame game. And ultimately, and I've said this from the beginning, if we de-escalate, if we can get the Strait of Hormuz open within, let's say, 6-week period from the beginning of this conflict, then it's a very different situation. Every day that ticks by makes it more complicated, of course, but ultimately my book is set up with the hedges on for a de-escalation. It's working nicely so far. Obviously, I bought some silver the other day, which some of you might be interested in hearing me say that, because of course I've been talking about silver a lot, and it got up to, when I was sending out messages when it was above 90, 100, 125, and it went parabolic.
Just off of a new low.
I was explaining how this was going to end, which is, it's one of the most parabolic situations I've seen in a long time. It always ends the same. This one was incredibly dramatic due to the fact that retail piled in, the leverage, and of course it blew up. And but it's not so much physical silver or paper contracts, it's the silver miners who make money. Like Pan American Silver, for example. I actually took profit in that today, but I'll probably get back into it. This company makes money, and this is something that a lot of people probably don't understand. It's the same as the oil companies, for example. It doesn't matter whether silver's at 50 or 100. Their contracts are locked in at least one, probably more like 2 or maybe even 3 years ahead. So it's smoothed out. So they're making a lot of money, and it doesn't really change much whether silver's 50 or 100. So there's that particular nuance that you need to understand. Yes, it trades along with the physical in sympathy, but ultimately the net impact on their bottom line is very different to the fluctuations and the volatility in the actual commodity itself. Pan American Silver, you can pick your poison.
Too soon to say
a very high quality company with a lot of free cash flow and very well managed, and so that's my go-to silver play.
Is a point of conversation
and as you can see, the market has rotated out of all of the crowded positions. Everyone had piled into value and banks and cyclicals because the economy was strong, and we were rotating out of tech. And then suddenly this curveball has been thrown upon us with oil, and guess what? That's economically sensitive. So all of the stuff that everyone had just piled into, which is Japan, the FTSE, Europe, miners, gold, etc., etc. These are the consensus longs, which all the professionals are long. Everyone has had a really tough time. I avoided all those things. I was kind of sort of semi-shorting them because I always avoid crowded situations, no matter what, because when the tide turns, everyone's on one side of the boat. It's always aggressive, and you feel like an idiot because why are you buying something that's massively overbought,
UPS
massively
is now
crowded? Are you
continuing
buying
a
it
little
because it's
higher,
a good
up
position to
about
buy it, or are you buying it just
0.8%.
because it looks great on
Looks
the
like in
charts and everyone
reaction
else
to
is
that
buying
report
it? And that's
that
fine.
the USPS
That works
will
sometimes, but
impose an
ultimately that's
8%
not something I
fuel
want to be
surcharge
involved
on
in. So
packages.
I've waited for the sell-off. 200-day moving average almost hit on Pan American Silver, so I bought that. I took profit today, but I will buy that back. So there's rotations going on. Metals versus oil, for example. I'm short oil versus long metals. That's an anti-consensus trade as well. Very crowded. Metals longs have now reversed. So that and I've got clients asking me about what oil stocks to buy, and I'm like, well, none of them, because as far as I'm concerned, oil is 1
Well, it
week,
wraps
maybe
up
2
the
weeks
press
away from getting
briefing.
spanked, and therefore, why would I want to be? So I'm waiting for my moment there. So you've got to be very nimble. You've got to be very careful. But even when we get out, if we let's assume for argument's sake that we do see a significant de-escalation in the Iran situation over the next week, based purely on the positioning alone, it doesn't really matter what the fundamentals are of the economy, the macro, the micro. In the short term, it's all about positioning. Everyone has got very, very bearish, even though the stock market hasn't actually gone down that much. The positioning, the options activity is all quite bearish. So it's set up for an aggressive squeeze. I mean, look at JP Morgan, you look at Goldman Sachs, you look at Morgan Stanley. These guys are, that's 3 of the top 4 investment banks in the world. These guys are all basically saying it's time to get into equities. You don't need to listen to what they're saying, but it's interesting to think about, given all the noise and all the
Hang on, Piers,
negativity.
we've lost you.
Lost me?
Yeah, we've lost you. Hold on.
What do you mean?
Just click accept,
Okay.
and just put the camera on bottom left. Near,
Where?
give
Quick,
us a-
quick,
give us a
quick. Yeah,
mouse.
go. Quick.
There we are.
Sorry, guys, I'm back. So it's a very interesting situation. It's very hands-on. It's very difficult if you're an investor and you're not used to trading. Quite frankly, in my view, this is going to be a trading market for quite some time. So if you're someone who can't short, can't get in and out, can't be nimble, then you need to either move to cash or pick your levels. There's lots of opportunities. I mean, there's lots of very, very, very oversold stocks. I mean, and there's lots of very cheap stocks, but the market can be irrational. The market can hurt you. The market can continue to be, I could name so many different stocks that are just being so irrational right now. I've got a few in my book. Oracle's probably the greatest example. Those of you on TikTok who have followed me for a long time, I've got this stock massively wrong. It's been a shocker for me, but it doesn't bother me. I've stopped out, I've stuck to the rules. And bearing in mind, I've got a bunch of stuff really badly wrong this year, but I don't care. My book is up. It's not about one stock. It's about managing the book, managing the risk, and ultimately making money. But the reason why I'm focused on Oracle and software, I've got Salesforce and Oracle in the book, is because I've done this for long enough to know that you need to look through the noise. Yesterday was a wonderful example. Amazon came out saying they've got this new AI tool that's ultimately going to collect and analyze data internally. By the way, that's very Palantir-esque. Not that that's, it's emotional. All of these software universe was down yesterday, but why is Oracle down on the back of that? Oracle has nothing to do with that at all. In fact, Oracle pivoted to an AI infrastructure play, which was quite smart. They leveraged up their balance sheet, and that's the reason why the market hasn't been celebrating them. But I'm staying very focused. Oracle is trading on 20 times forward earnings with 35% revenue growth out to 2029. That makes them half the price of Microsoft, for example, who are trading on 21 times earnings with only 15% revenue growth. And yes, the balance sheet of Oracle, of course, is the major concern, but it's a binary situation. Either they manage to bring in their top line revenue as promised, as ordered, and they'll be totally fine. And by the way, if they are, we're looking at $25 to $30 billion of free cash flow in 2029 for Oracle. If that's where they go, if that's the trajectory, this stock is going to be at least 100% higher, right? And that's not some sort of wild speculative comment. That's just the way this is going to work. So that's why I'm focused on that. Salesforce is a similar situation because, of course, Mark Benioff, who's a very straight shooter, He's very well respected. He's the ultimate sort of leader of the software as a service game. He said very carefully, this is not the first software as a service apocalypse we've ever had, and it's not going to be the last. He's already pivoted. He's already moved to AI AI agents as a service. These guys are on top of it, and they're working with AI as well. So software remains a focus for me. I've got the book. I've got Pfizer in the book, of course, which is my sort of deep value play. This is a very unloved company who are trading on 8 times earnings with $17 billion of free cash flow. Why do I like having Pfizer in the book? There's so much optionality. They're trying to move into the GLP game. They bought Metsera. Obviously, they won that battle against Novo. They paid up for it because they can. They've got loads of cash. It's just a relaxing position to have in the book. Imagine if you've got something in the book that everyone's crowded into. It's scary as anything. Look in Europe, Siemens Energy, Schneider Electric, Mittal, ASML. They're all great, but they're crowded and they're economically sensitive, and be careful with crowded stuff. That's why I'm short SanDisk. I've been in and out. I was down 9% on the open today because they bought Nanya, but that's the point of the game we're at now. These guys are having to spend a lot of money. We heard the CapEx story from Micron the other night. To keep up with the orders, you have to be careful what you wish for, right? These guys have got huge amounts of top line growth. The market is, the professional world started 2026 with like scratching their heads. I got phone calls from clients saying, what are we buying this year? Can we pivot into Mag 7 again? Well, maybe, maybe not. It's a bit nuanced, but what's the hottest thing since, it's now Micron, after their rally are on like 10 times forward earnings. So it's a very difficult world, and people are trying to chase their tails. But the bottom line is, I don't want to be involved in crowded situations right now. And I'm also, even though I'm set up for a bounce in the market, and it seems to me fairly obvious that that's what's going to happen, that doesn't mean that I'm sort of mega bullish on the market. Quite the opposite. Once we've got that done, then we have to move forward and deal with what's going to be the impact of this inflation shock on EPS assumptions, on the guidance calls, on what the Fed are going to do. There's so many different things that we have to take into consideration, and this is quite an unusual sort of semi-black swan event that's going to take quite some time to filter through the system. As a trader, I love that because it means we're going to have volatility, and that's great. But you have to be very careful because we came into this year hot as hell. Last year was a massively successful year for the stock market. We had every strategist in the world calling the market high this year. Even the ones who are massively bearish just threw the towel in, of course, as they do, upgraded. The consensus call was at 20% higher. That's a big alarm bell in itself. I said to my community at the beginning of the year, I don't know what it's going to be, but I can guarantee you something's going to happen, because when everyone's saying the same thing, 90% of the time the opposite happens. So it's going to be, yeah.
And Piers, can you just expand a little bit for everybody on, obviously there's a lot of noise and you've talked about Iran, but what's not being talked about in the markets as much and anywhere near as much as it perhaps should do is the interest rates, the Fed, how they're maybe moving the narrative, and the bigger macro with the bond market that you've been talking about as well.
Yeah. So Jacob just is talking about, and the thing is, it's very difficult. I'm desperate to pack in as much as I can on this live, but for the first time in a long time, the macro is front and center. And it's been beautiful for me because I said to my community at the beginning of this journey, just wait until the macro starts to take over. Just wait for the bond market to rear its head. Then I can show you why I've got videos in my educational section on the term premium, why I've got videos on Japan macro, why I've got videos on the DOMA spread, why I'm so obsessed with the bond market, because the bond market
Trump's now
is
posting
the
on Truth
boss.
Social about that
It is
China
the boss of
meeting.
everything. You watch what happens if the bond market wants
Again,
to tell Donald
reiterates
Trump
it
that
will
he's
take
been a
place
naughty
in
boy,
Beijing
or
on
anyone
May
else in the world.
14th
They
and
are just
15th.
irrelevant when the bond market, if the bond market wants to push
He
those
also
yields
says
higher
he will host
quickly.
Xi in Washington, D.C.
You watch
this
what
year.
happens. It's very, very dangerous, and the market will pay attention, and it doesn't really matter. And you do not want to be holding stocks that don't make money, that are leveraged. It's a very dangerous situation. And we've been in an environment for a very long time where very few people are even familiar with what it feels like to be in a bear market, what it feels like, or even what it looks like when the arse falls out of the market and there's no bid. We haven't had one for a while. The most recent example, of course, was in April 2025 when Trump did his tariff thing, but that was so short-lived and it was self-inflicted, so it's not a real thing. You wait until we have a real problem. Wait till we have an inflation shock. Just for example, I'm not saying this is going to happen, but just for an example, if we had, over the backward-looking macro numbers that we've just had are irrelevant. Wait till next month and maybe the month after that. And if we see a genuine spike in inflation and that actually takes hold in the market, you watch what happens. The market has is showing one hell of a chin right now. Everyone's long. It's been going up for a very long time. Valuations, have come back a little bit, but the power of the bond market cannot be understated. Anyone who cares about markets and wants to know about what really drives them, you've got to study the bond market. You've got to know what these things are. Please come into my community, TikTok, people who are watching now, and find out. I've got educational stuff on the term premium, on the DOMA spread, and all the macro rules and regulations, if you will. It's critical to know. And I didn't actually work this out until about 10 years into my career when I sat next to a macro genius who ultimately taught all this stuff to me. But now is a great time to learn. Yes, it's painful. Yes, lots of these things aren't working. But that's one perspective. Or you could look at it and go, hang on a sec, why don't I figure out what's moving these markets? This is new to me, and ultimately this is a great learning experience. So let me summarize the market and this point. This is a very uncertain environment. I'm set up for a bounce in the market. Sure, it's a positioning thing. It's a de-escalation thing. But the macro I have maximum respect for it, and I'm watching it very, very carefully, and I'm ready to whack my shorts on if I need to. I don't have any bias. I'm very prepared for all the outcomes that we potentially might have. The only thing that I know for certain is that we're going to have a lot of volatility in the short term. That's the only thing that I know for certain.
Thanks for the update on the market, Piers. So just a reminder, maybe you can remind everybody on social media that we're live on the Discord. They can come and join the Discord for free, and we'll be doing a Q&A at the end where we're inviting people.
Those of you on social media who are watching, thank you for tuning in. If you want to join the Discord, please do. That will make your experience much easier, definitely in terms of questions, and we'll be doing a Q&A at the end of this. So I could talk for a year on the market, but I will not, because I don't have a year, nor do you. So I will just wrap that up by saying we are in a very complicated situation. The macro is finally here in front of us to learn about. Some of you totally understand it. Some of you don't. I sit next to people who have worked in this market for 20, 30 years and they still don't understand it. So it's okay. It takes time. There's no ego here. There's a lot to learn, but the best way to learn is if someone who understands it explains it to you whilst you're looking at it in real time. In fact, that's the only way to learn, in my opinion. So watch and learn, because this is not going to be a short-term thing. This is going to be a proper learning experience for quite some time. It might be the entire year. Who knows? Who cares? As long as you have a book and a platform where you can go long, short, you can do whatever you want, you're going to have a fun time. So I'll leave that there. Second one is with regard to my community and Apex. Those of you who are following on social media, you won't know what this means, but Apex, I'm talking to you. We just put a huge dump of content into the educational section, which was all redone in high definition, and ultimately we tried to fill in all the gaps that were there before. I hope there's more to come, of course, but ultimately the educational section is now, I hope, filled out a little bit, and I truly hope that those of you who are new, or even those of you who are old and haven't got around to it yet, take your time to go through those videos, because quite frankly, it's quite a daunting thing if you haven't done markets before. But the whole point of what I've done there is to try and give you the most important things that you need to know, and you need to know them all, quite frankly. So if you watch them all, then watch all my briefs, which I try every day to teach you something new in real time whilst watching the market in the briefs, and then the book and the whole thing. But don't rush, take your time. But that's a critical part of the thing, and I just want to make sure that everyone is at least aware that that's all there and being redone by the team. Second thing is the macro book. I've sent quite a few voice notes to accompany the updates on this, and the reason why that is because it's complicated, the macro book. It's very different to the equity book, especially in an environment like this, because I'm trying to represent my top-down macro views let's take copper, for example. Copper is one of the most fantastic fundamental stories of our time. Does that matter when the market's selling off and we've got economically sensitive stuff getting hammered? Absolutely not. That doesn't matter at all. So I had to cut my copper position, and yes, I want to add back to it. And today it's actually like my macro book is actually max long de-escalation. I'm short oil, long silver, long KWEB, which for those of you who don't know is the China Internet ETF listed in the US. And I am, what else am I long? I'm long copper as well. I'm going to add back to copper, but that book is small and uncomplicated for a reason. So I just want to make that crystal clear. When I've got stronger conviction in the macro space, I've got a lot of conviction in KWEB, which is, as you can see in the book, I'm probably going to add back to it. I've got a lot of conviction in being short oil, which may be surprising to some of you, but I do, and I'm hoping to add to that position. So, but that's a separate gig to the equity book. The equity book is where it's at, because I can be very nimble. I can make money quickly, 5-10% here and there, shorting this, long that. So it's a very, very different situation. I can always make a bit of P&L here and there in the equity book, because it's like being in a candy store. There's so many things to choose from. Whereas in the macro, you've got to be a little bit more thematic, not so much trading, not in and out, sort of fundamental strategic stuff. I can't sort of trade in and out, and quite frankly, that's not the point. The point is for me to have a low volatility trading book where you can sort of see my slightly longer term, long only or short only ideas. It's not like a high volatility trading book like the other one is. So that's that. Number 3, Apex community. I hope you are, Connor, who is, you guys are obviously familiar with, is our in-house man who, quite frankly, is a genius in the tech universe. He does stuff that I don't have a clue. I wouldn't even know how to start some of the stuff that he's doing. He's incorporated Claude AI into the entire ecosystem. We've got the alerts on insider buys. We've got the daily wraps on all the stuff that I've said and done during the day.
Can you clarify the insider buys?
Insider buys is linked to S&P 500 companies where the significant insiders have bought more than $50,000 of stock. And I actually am in the middle of a conversation with him where I'm going to get that increased to a larger size so it's more significant. But I wouldn't have the alerts on that if I were you. I don't, because there's quite a lot of volume. But when you get time, it's worth going to have a look at that, and it's going to be fine-tuned because it is quite interesting. There's a lot of noise there. Like there's a lot of insider buying that goes on. And some of it's significant, some of it's not. But watch this space. But it's definitely a very interesting and valuable product if you've got the time to keep up with it throughout the day. And of course, we've got the in-house FCA regulation, and we've got you can ask pretty much any question. It's a work in progress, but
and then we've got the market wrap on the news and research.
Yeah.
4:30.
And when we get to the Q&A, I wouldn't mind just asking for your feedback on that and any thoughts that on what you may or may not want to have added or subtracted in the future. But it's a whole new world for me having this stuff, and it's quite amazing. And I think it's quite exciting moving forward with the Apex product, having the help of all this of the AI integration. So that's that subject. Next one is the seminar update. Those of you who have bought tickets to the seminar, I am truly excited to meet you all because, quite frankly, this is a very special team. Those of you who are on social media, I'm talking to my community right now who are a seriously special bunch of people from all over the world. There's lots of common things amongst everyone, but the sense of community is extraordinary. It's like being in the social media universe is like being in a jungle. There's no friends. It's like a war. Being inside Apex is like having a warm blanket on top of you. Everyone's looking out for everyone. Everyone's helping everyone, and it's awesome. So I cannot wait to meet everyone face to face. And I realize it's a big ask for those of you who don't live in or near London or even in England. But if Apex continues into the future, which I very much hope it does, this will be the first of many. I hope to do one in Val d'Isere in 2027, just to be clear. But that'll be down to you guys. But
maybe you just want to give social media an update on what exactly the seminar is.
I just want to make the point that I'm very excited about meeting everyone, and I really hope that those of you who have not bought a ticket that potentially can come, well, think about coming, because it's going to be great fun. I mean, obviously there'll be me and Will and Rich talking to you about markets, but if you ask me, it's meeting everyone's going to be the highlight for me. So if you haven't bought a ticket and you want to come, please do. And those of you who have, I can't wait to see you. And those of you in the social media world listening to me right now, just go to the website and it's all there for you. What did you say?
I was going to say about the other thing about the seminar is that we've now, to announce to everyone, we're bringing the free tickets for the drinks. Yeah.
And yeah, so Jacob just reminded me, those of you who are coming to the seminar and want to come to the drinks after the seminar, which ultimately, in my view, will be the most fun part of it, please, what do they need to do?
So we will be setting up a free ticketing system on Eventbrite.
Yeah, on Eventbrite. So you don't have to pay anything, but you just need to get a ticket so that we know you're coming, ultimately. So that's that. And yeah, I will shut up and answer some questions. So those of you who want to come to the stage, Anna, I love that. Martini, $2. Right. I feel like I've been talking to social media. I'm going to glance over to my community, who are my friends. Anyone who wants to ask a question, please come to the stage or... What's the other option?
Well, it's totally up to them. We can either ask questions in the chat. Let me just...
Here you go. Invite to speak. I know. What's Connor, fuck's sake? Rainus, go away, mate. Come on.
Hang on. So I just need to...
Such a nuanced live.
I can't even remember how to bring myself up on stage.
So nuanced.
Maybe I won't. Hang on. There's somebody wanting to come up. Hang on. Invite to speak. We've got a person, Garbs, wanting to come up.
Garbs.
Garbs, you've been invited to come up. There we go.
Amazing. This is exciting. I love meeting people.
We can't hear anything at the moment, so maybe that's your end, Piers. Hang on. Can everybody else hear him?
Oh.
Hang
on.
Can
you guys hear me?
They can hear him. So hang on. Let me just see if I can. Let me just see if I can give us this.
We hear you, Garbs.
No, we don't. But
well, he does. Rainers can hear.
Yeah, they do.
Oh wait, is that me?
No. Yeah. Hold on.
There you go. All right. Hello.
Hold on, mate.
Right, that's not working.
Let me just see. Why isn't it?
And regarding the Russia-Ukraine conflict,
are we?
Reuters says the U.S. has
Bloomberg.
made its offer
That's
of
Bloomberg.
security
That's Bloomberg.
guarantees
Hi, everyone.
for a peace
Right.
deal
There we
in
go.
Ukraine,
Let's try now.
conditional
Garbs, can you hear
on
us?
Hello?
Kiev
There we go.
ceding
Hello, we
all
can
the
hear you.
country's eastern region of Donbass
How are you?
to Russia.
I'm very well. How are you?
I'm good, thank you. Thanks for coming on here. I just have a question about thing. I come from the scalping world, the day trading world, and I've never been able to hold trades for more than a. What do you think is the best way to start in terms of the investing side, like you're doing, coming from a scalping day trading environment?
Yeah, well, thank you for the question. Those of you who did not hear that question, it is someone who's coming from the day trading scalping environment. How would you start your process? You're a member of Apex Community, right? Otherwise, you wouldn't be on the stage.
Yes.
Yeah.
Yes.
Well, without sounding too ridiculous, the answer to the question is you have come to the exactly correct place to be able to do that, because you can. What I'm trying to do here is everything. Listen, I know what you do, and quite frankly, that's if you wanted to put a list together of all the different things you can do in the market to make money, day trading and scalping is a very sort of niche area. But I'd like to think that if you stay here at Apex, you watch the lives. Sorry, you watch the briefs, you listen to me, you watch the community, watch the educational stuff, and you spend enough time here, I will show you how to do everything from pick a stock to buy and hold, from a deeply fundamental perspective to trading stocks long or short. I do intraday trading sometimes myself. I suppose you could, not scalping as such, but all the different aspects of making money as a trader and an investor, from macro to micro, and the entire suite of tools that you need, I will give you here at Apex. So the answer to your question is you've come to the right place, and welcome, and just give me enough of your time and we'll get there.
Thank you. Cheers.
Nice to meet you, mate.
The same here, mate. Cheers.
So I think
Thank you.
Mind Your Business was up next. If you want to unmute yourself.
Hello, good evening. How are you?
Hello, welcome.
Hi. I've been a part of the Apex community for a while, but I haven't really been utilizing it as much, just purely because of work, and I've been busy doing other things. And I myself, same as the other gentleman, I mainly do scalping, so I'll go on to like the ETFs and just take a trade for a few hours, hold it, a few contracts on the futures and whatnot. But I'm done with that. It's too stressful and it's too much, and I want to become more of a fundamental trader.
Yeah.
And take this more seriously. I've watched your education videos about the DOMAR spreads and the premiums and all of those things. I've made notes. I'm more academic than what I am anything else in terms of putting practice into theory into practice. So I suppose my question is after I've watched the education videos, for example, let's just say I've watched everything, I understand what I'm sort of looking for in a trade. How would you use that information that I would take, the notes, for example, and then put that forward? For example, if I'm looking at, I don't know, EU stock indices, for example, an ETF. So would I look at these things and then decide, okay, it fits a specific criteria? And then I decide to take a long or a short, depending on how the numbers figure out. How do you go about deciding which ETF to take or which stock to take using your education videos, for example?
Wow. Do you know what? This is just give me a moment to respond to this question, because hopefully if you've been watching me in this community, you know that I genuinely give a shit about trying to explain to you the answer to this question. But the question you've asked me is the number one question. It is very hard for me to respond to this, but I'm going to do my best. I'm going to do my best, because you are the person that I really want to communicate with, because you clearly are interested in markets. You've been trying to trade markets until this point. You've been doing this fucking stupid scalping stuff, which retail people are force fed by God knows which idiot came up with that. But the point being is that I want to teach you how you can do it all and know what's moving the market. And by the way, it's such a beautiful thing when you get a fundamental. When you're in scalping, is literally the most. It's like it is the
migraine. It's a migraine.
It's the lowest form of trading. It is the most retarded thing in the world. Okay.
Careful.
No. And listen, this is not an insult. I'm just being to you or anyone. This is just. I'm passionate about this because I want to open up your world to understanding how, if you get the positioning, the valuation, the market, the macro, and the whole thing right, and you put a position on, whether it's long or short, and you've got high conviction, and you wait for the right moment and the right stock and the right situation, and you let it run, and you make a fortune out of that based on true fundamental analysis on macro and micro. It's the most beautiful feeling in the world, and you make a shitload of money, and it's based on facts and fundamentals. It's not based on just highly fucking stressed intraday price action. So nothing, anyone who wants to do any type of trading any way they want, if they make money, good on them. I'm not by any means being condescending to any type of trading, but I desperately want to teach you guys who care about markets how to figure it out. But to answer your question, unfortunately, there's no shortcut to this. I'm trying my best to give you guys a shortcut, but the only way that you'll truly, like when you say, once you read the DOMAR spread, once you read the term premium, once you understand the macro, that doesn't mean you automatically have, some magic formula for what to do. It's a combination of understanding what moves the markets, having experience watching how they react to multiple situations throughout multiple cycles, someone who knows what they're doing showing you in real time. That's my job. And then on top of that, getting the discipline and the trading right. So it's a very, very complex answer to that question, but I would just ask that you spend the time watching what I'm doing. So let's take right now, for example. Let me give you a real-time example.
Okay.
Let's use software, for example. Let's use the IGV, which is the software ETF in the US, right? It's full of Microsoft, Palantir, Oracle, Salesforce, some of the best companies, if not the best companies in the world. Not one of them is listed. Not one of them is listed in Europe, by the way. very oversold, very hated, very heavily shorted. So so number one, the positioning is very aggressively bearish. Is it bearish for a good reason? Maybe. Are these high quality companies and therefore they've become quite cheap? Yes. Are they trading on support levels technically? Yes. Is the macro supportive? In other words, we have gone from a situation where the economy was sort of rolling nicely to a situation where it's economically sensitive, which means that people pivot back to economically insulated companies, which is, yes, it's software companies. Software companies are very low down on the list of companies that care about oil prices. So that's another tick. Is it technically supported? There's a whole wide range of things. And then you throw in on top of all of that, your instinct based on your extensive experience of watching stocks and markets throughout multiple cycles. That's something that last bit only comes with time. I'm trying to fast track that time, but you have to, so what I would say to you to summarize is just try and watch all of my briefs and the way that I'm trading and how I explain it to you. And then over a period of time, you'll slowly get I would imagine it'll just bit by bit start to sink in, and then you'll feel more comfortable, but it will take time. There's no shortcut.
Yeah, I'm not looking. One thing I've realized from scalping is that there is no shortcut to trading. I can give you any day trading strategy that I've learned over the years, and frontwards, backwards, forwards, left and right. But none of it has ever had any fundamental macro or micro fundamental analysis, just pure technical, and I'm done with it. And even if it takes me a little while longer to learn, I'm willing to do that. Obviously I can scalp during the day on my IG account. It's not a problem. Make a few points here and there. It's not an issue. And obviously I've got an income. I'm not looking to do a quick, I know this isn't a quick process, but I want to learn the process. And I think for me, learning is the bit that I want to put theory into practice. So even if it means going on a demo account and working it out and whatnot, I'm happy to do that however long it takes. So just the guidance on that. So briefs, okay, I'll start with that then.
Yeah, don't miss any briefs. Take your time and just look forward to buying a stock and holding it for 3 to 6 months and making a fortune rather than the highly stressed, painful world of scalping.
Okay, long term. Okay,
right.
Thank you.
Thank you for your
Thank
question.
you very much. That's great. Really worth spending time there. Very.
Dolce & Gabbana readies
Jamie,
for lender talks.
would you like to
as
unmute?
Debt pressure rises. Companies working with Rothschild
So
as a
guys, that's my
financial
Bloomberg
advisor.
squawk box, by the way. Apologies.
Jamie, would you like to unmute? In fact, I'll try and I don't know if I can
Jamie,
unmute.
are you up, pal?
You're muted at the moment.
Jamie Hill in the house, mate. Take the mute off. There he is.
There he is.
Well, I'm not a scalper, but I've been diagnosed as a bear by the community.
There he is. That's okay.
I'm interested I've never really taken too much notice of insider trades, but are there any circumstances, Piers, under which you would put something in the book on that premise alone, on that factor alone?
No, absolutely not.
And if
Sorry, carry on. Sorry, carry on with your question.
no, so then in which case we all wouldn't have to study it, and we could just rely on on your knowledge. But that if it's not a factor that would promote something to the book just on that alone.
No, not on that alone. But let me answer that question so that you can truly understand my thought process and what I was saying before on this. It's quite a powerful thing. So insiders sell stock in their own company for multiple reasons, but they only buy stock in their company for one reason, and that is that it's going to go up and they think it's going to go up. So insider buys is quite powerful. For me, it's very noisy. I mean, there's 400,000 insider buys per day. I like to focus on the big ones by the big companies with the big CEOs and the smart people when they buy proper size and they're actually putting their money where their mouth is. That's the stuff that makes me pay attention, and that's the stuff that will add to my story. I will never buy a stock based purely on the fact that the CEO or the CFO or the COO is buying a big chunk of that stock. I'll pay attention to it, I'll note it, but it will have to be along with the fundamentals, along with the technicals. But let's take, for example, I'm just making this up. Let's take, for example, Disney. Everyone knows who Disney is. Everyone knows who Bob Iger is, who's the CEO of Disney. Well, he's about to leave, but very successful CEO, very smart CEO, very successful CEO, very wealthy CEO. if I want to buy Disney and I'm thinking about buying Disney and I see on the tape that he's bought $3 million of Disney with his own cash and it's at a good level, yes, I will pay attention to that, and yes, that will convince me to buy the stock. So as with everything, it's nuanced, but I hope that makes sense to you.
Yeah. Thanks very much.
Yeah, no, and thank you so much for all your contributions, mate. Thank you. It's good to have you here.
Cheers.
Cheers, mate.
Thank you, Jamie. Just looking then. Okay, we've got another person. Hang on. Oh no, what did I do there? It was Wojtek, I think, who we missed the request. Do you want to
Long
send
story
it again?
short, I think Connor needs to make that section so that it's like only big buys.
Okay, do you want to take maybe a question from TikTok?
Right, a TikTok question. Go on then. Matey, thoughts on Illuma? Oh, do I have to talk about Illuma
No,
again?
skip it for the moment.
I'm not talking about Illuma. I can't be bothered.
We've said we've done enough videos.
No, I've done 4,000. Honestly, I'm considering selling it, just so I don't have to talk about it anymore.
Okay, we've got one from
How much
Sparkles
are you
in the
charging
chat.
for your community? £30 a month. Has anyone got a question? Microsoft. Should we talk about Microsoft? ARM. Okay, here we go. Fine. Micron. Bosch. Here's some questions. Okay, let's talk about Microsoft. Let's talk about Micron. Let's talk about ARM. Three very important questions. Three very important companies. Three very interesting situations. Microsoft. Historically cheap, or is it? 15% revenue growth, 20 times forward earnings. They've been trading around 28 times forward earnings for quite some time, but their revenue growth has been in the 20s. So always take that in consideration. What are
In
you
the tech
paying
space, Insider
for
reports
the
that
growth?
one of
That's the question.
XAI's co-founders
15%
is
growth
leaving
for a
the
company as big as Microsoft is a significant clip of growth. You're paying 20 times earnings for that. That's quite cheap. It is cheap. It's cheap on an absolute basis and a relative basis. Are they going to get killed by AI? I doubt it. Are they very crowded still? Yes, they are. It's hard to argue that Microsoft aren't probably a buy here, but I just don't care. And why don't I care? Because they are just so crowded. I pitched this stock to a client in 2013. It was trading at $23 a share. Between that moment, and by the way, if I'd bought it myself, we'd probably have this conversation on a yacht or not at all. I didn't. Between that moment and this moment, they have been growing and growing and growing and growing and growing. Everyone on the planet is long Microsoft, even after this sell-off. Everyone loves Microsoft. Where's their growth coming? It's like Nvidia. I want stocks in my book that are the future, are the next generation of growth, are undervalued, are uncrowded, are unloved. Nvidia is the greatest example, right? Everyone's like, those numbers are spectacular. Sure, they are spectacular, but it's in the price. What happens in 2 years' time when that capex comes off? You have to ask yourself these questions. Where's the growth coming for these mega cap companies that are now mature? Some of them are paying a bloody dividend, for God's sake. That's game over, by the way. Meta are paying a dividend. That's what happens when a company becomes so mature and so cashed up that they start giving the capital back to shareholders. That's nirvana. That's ding, I ring the bell, goodbye. Let's move on to the next one if you want growth. So yeah, these companies are amazing, and sure, some of them are cheap, some of them are not, some of them are tradable, but Mag 7 doesn't excite me very much. It's about Mag 7 was 2013 to 2025. What about 2026 to 2036? What are we doing with those stocks? Are they going to be Mag 7? I doubt that, especially because they're technology. I doubt that very much. So yeah, Microsoft is cheap, tradable, maybe 15, 20% if the market's nice. But I'm not that excited about it. I'm excited about other names. That's Microsoft. Micron. Wow. I have a lot of history with this stock. I used to be an analyst for this stock in 2012, 2013, because of semiconductors were obviously my bread and butter. This is the ultimate cyclical stock. They've always been applied a discount, 7-8 times earnings max. The cyclicality of these stocks, and by these stocks I mean the memory stocks, DRAM, SanDisk, Micron, Samsung, SK Hynix, Western Digital and Seagate in the hard disk drive space. They've always traded at a discount. Why? Because they're the same as copper. They're the same as, not gold. They're the same as all the cyclical companies. In other words, they're a commodity. And we're into a super cycle now for these guys because of the AI demand. No one really saw it coming. I was talking to my clients about Micron 2 years ago. It was trading at, what was it trading at? $70 or $80 a share. I wish I'd bought it, by the way. I traded it for a bit. But the bottom line is that we've got to the point now where everyone's piled into Micron. Apparently nothing can ever go wrong, apart from the fact that they're all having to ramp up their production, and then DRAM prices are going to collapse. So let me leave you with this thought. Micron may well go up another 20%. Sure. The easy money in the Micron trade has 100% been made. I like looking for the easy money, not the hard money in a trade. I spoke to a client about this, a hedge fund client, right, about Micron. I said, what are your thoughts on Micron? His response was, don't be ridiculous. It's cyclical. Micron and all the cyclical stocks, they're the cheapest at the top of the cycle. Why? Because that's when prices are the highest. So you have to be very careful with cyclical stocks. They become very cheap at the highs. That's the nature of cyclical stocks. So you have to be very careful because it's counterintuitive. Usually you want to look for a cheap stock, but if it's a cyclical stock, it's the cheapest at the top of the cycle. That's why I'm shying away from these cyclical cheap stocks. The third one is ARM. Really interesting company. Fantastic guidance, fantastic earnings. Beat everyone's expectations. But the most important thing that they said last night was that they are developing their own in-house CPU. They've had
CBS
ambitions for this for a long time.
There's a long-term agreement with the WNBA.
It's a bit, again, it's a bit nuanced because
air up to 20 games per year.
So
on
this is my
TV
Bloomberg
and
score.
Paramount Plus.
They are now going to be selling chips and competing with their own customers, which is really interesting. Stocks up massive today on big volume, and that's very much justified. But the problem is with ARM, it's like AMD, right? They're trading on 70 times earnings, ARM, forward earnings. That's very expensive because they're still growing in to their valuation. Think about how expensive that is. They haven't had their ChatGPT moment. I always use that as my example. NVIDIA has always been very, very expensive. Then suddenly overnight, top and bottom line exploded higher due to the ChatGPT business, and everyone goes, oh, okay, now it's all justified. Now I get it. At some point, these companies, whether it be Micron, whether it be whatever it may be, actually Micron's so not a good example, whether it be AMD or ARM or any of these other high quality chip companies which are high growth and very expensive, at some point, the chickens have to come home, right, to roost. You have that valuation can't be 70 times earnings. When you become a mature company and a proper company, your valuation comes down to the teens, below 20 for sure. So just think that's the end game, right? You've always got to think about the end game. It's very expensive. Can they grow into it? Maybe this is the next leg of growth. I do like ARM. I do want to buy ARM. I'm not going to chase it. I'll probably wait for a dip and then buy it. So that's that one.
Piers,
my mouth's getting dry.
Piers, we've got a great question from the community. Have
you got any water, mate?
No, unfortunately not. We've got a great question.
If my mouth starts sticking together because I can't answer questions, it's Jacob's fault.
It's all my fault, apparently. We've got a great question from the community. Sparkles said, maybe one to think about. You don't have to answer straight away if you want to have a bit of a think. Can you tell us the story of your biggest loss that ultimately was your best learning moment?
Yeah, I will. And it's not just one. So I... Do
you want to repeat that, maybe, in case socials
Can you get me some water? Because I'm literally can't answer this question.
Have you got the code?
No, this is a really, really, really... Jacob won't give me any water, everyone. Can I go and get some water and then answer this question?
No, you'll lose everyone. I'll get you some.
All right, fine.
I'll get you some.
Right, no, it's fine. Please.
Look at this. And the maid.
Yeah, well, go get me some water, pal. So... Guys, I'm going to tell you a story about my own losses and my own learning experience so that no doubt you'll go and make the same mistakes yourself, but I'm going to share it with you anyway. During the years, bearing in mind, I started doing financial markets in 2003. So 1 decade later, in 2013, I thought that I knew a lot about markets. I can guarantee you I did not, and I was pretty shit at trading, quite frankly. I thought it'd be fun to set up a leveraged trading account with IG and start trading massive size, no stop losses, no book management, no position sizing, trying to be clever, trying to short the NASDAQ of all things, when I got overbought, blah, blah, blah. And I lost a fortune. I kept losing money over and over again because of the human desire to try and be right. And that's why the robots have taken over a lot of trading, because they don't have any emotion, right? it's as a human, it's very hard to cut your losses because you try. Fubo is a great example, right? I just cut that today, bought it back because of the price action. But the bottom line is, if you continue to add to losing positions, you are going to lose a lot of money. And if you do that with a leverage trading account, you are fucked. Pardon my French. So I've had lots of losses over the years, lots of hard lessons, but my biggest and most painful was in the leveraged trading environment with no stop losses and no discipline and no book that had the correct position size. So I lost a lot of money and I've learned some very hard lessons, I hope. And you know what, nature, no matter how many times I tell you guys about this stuff, human beings will go and make the same mistakes themselves. I mean, no doubt Jodie's itching right now to go and shut. So many people live off piece, but I get it.
Seeing a
It's
pullback
human
in the
nature to
S&P.
be off piece. But
Still up 0.5%.
just I can't tell you how important it is to stick to the rules because otherwise you're just going to lose a lot of money. But it's a good way to learn, though. There she is. Hi, Jodie. So, hey, mate. I love you, by the way, so just to be clear about that. I love everyone. Hey, mate. So that's that. And listen, I just want to be clear on something, by the way. There's no... You guys might think, because I'm, quite stressed out and talking fast and all this shit that... And,
NASDAQ
I'm quite
100's
talking
fading as well.
confidently about this stuff, that there's a lot of ego
It
involved.
looks like
but
crude's ticking
I can
higher.
guarantee you there's no ego. I've been slaughtered many, many, many times. I've learned lessons the very, very hard way. And, there's no such thing as, I was joking the other night about I told you so. You don't use those words. No one has a fucking clue. I tell you what I'm good at, though, and that's managing risk. And that's the most important thing. Cutting losses, managing the book, focusing on the P&L. And that's the job. That is the job. Picking stocks, yeah, I'm good at that, sure. But that's actually not as important as the other thing I just said. And that's the thing that I want to teach everyone. So that's that. Charlie, what are you asking me? Actually, off to cut something. What's Fubo doing? I haven't even looked at my bloody screen. Is it? Where's that trading? Right. Should I do one more question? What time is it?
Well, maybe do one more question from the community.
One more question.
And then one more question from socials.
Okay, we'll do two more questions. One from the community. Can you talk about K-Web? Yeah, that's a good question.
That was
I'll
a
do
fast
that.
question.
The sound keeps cutting out. Can you guys hear me? Can you guys hear me? Yeah,
Okay.
cool.
Yeah, fine.
Okay, K-Web. Those of you who don't know what K-Web is, this is the China internet stocks listed in the US, in US dollars, as an ADR, which is an acronym that stands for American Depository Receipt. There's also GDRs, which are in pounds, but K-Web is a spicy, strange beast. I did Asia for the first 8 years of my career, so this is close to my heart. And you have to know what you're doing with these Chinese listed stocks, right? Because it's not just as simple as working out the valuations and the trading. You also have to figure out who's in, like, long-only investors left the China market quite a long time ago. For a lot of serious investors, it's actually totally off the menu because they just got sick and tired of Beijing meddling in these companies, in the fluctuations in economic growth, the shareholder structures, a whole list of stuff which essentially made it uninvestable. And JP Morgan's famous quote from 2022 was, "China is uninvestable." Bearing in mind, China was one of the biggest investment themes for about a decade prior to that. So it's a pretty good big call for one of the biggest investment banks in the world to say China is uninvestable. Obviously, that's nuanced, and obviously some investors have come and gone and come back, but ultimately it's a hedge fund hotel, the Hong Kong market, retail and hedge funds, which makes it spicy and volatile. But there's some good companies out there, right? You've got Alibaba is a really interesting situation. 16 times earnings, $17 billion of free cash flow. They are Amazon, they're OpenAI, all in one company. If they weren't a Chinese company, they'd probably be a lot higher. But the point being is that the, hang on, what's that in there? The point being is that the, you have to, getting the fundamentals of the company is one thing, but you have to also get the market right as well. So it has to be,
Keep going, mate.
no,
You're good.
I'm
Keep-
just
yeah,
listening.
keep going.
So I am long Kweb because it's been massively de-risked. There's Tencent, Baidu, Meituan, Pinduoduo, Alibaba, top 6 holdings. They are all high quality companies. They're all oversold. They're all cheap. And it's my view that it's a cheap, oversold, high quality place to be. So until proven otherwise, I will be there. But it's yeah, watch this space. I'll let you know if I change my view on it. But I like it a lot. I think it's massively mispriced, quite frankly. So that's that one.
And one more from social media, but we can't. Oh, I can give you one. Hang on.
Please break down Amazon. Oh no.
No, maybe not Amazon.
The DOJ charges
Okay,
a
no, listen,
Chinese
I'll answer the question on
national and
Amazon.
2 U.S. citizens with conspiring to smuggle AI tech
Amazon
to China.
is such a complicated stock. Guys, I'm only going to answer one more question, so don't bother asking anymore. Let me talk about Amazon. This company in 2013 was a zero. They were a retail company. They set up Amazon Prime, and at that point, margins were all over the shop, very thin, and they didn't have Amazon Web Services. Amazon Web Services is a cloud business, as you guys probably well know. That is the engine room. That is, I bet you guys don't know that 95, I'll say that again, 95% of Amazon's earnings growth comes from Amazon Web Services, which is a cloud business. These guys started as an online book company. Then they went to online retailing. Then they went to Amazon Prime. None of that is exciting. Then they started Amazon Web Services, and that's the reason why they are where they are. It's exactly the same as Microsoft, who started Azure. They're the 2 largest hyperscalers in the world. The only reason why the stocks are where they are is because of their cloud business. Now, these cloud businesses have been growing triple digits and then high double digits and now sort of low double digits for the last decade. They're mature businesses. So, when you look at the Amazon stock, first and foremost, you never know what you're going to get on the earnings call. You could get an EPS of $7 a share. You could get an EPS of $10 a share. You could get an EPS of $1 a share. The volatility in the EPS is extraordinary due to the retail business. What's going to drive the stock for the next few years? Where's the growth coming from? Is it going to be Amazon Web Services, which, by the way, is flip-flopping with Azure in terms of the leadership? That growth rate has come from 144%. 144% Amazon Web Services growth in 2016, 15, 16. That's come down to 22%. Okay, so you have to figure out where you are. They're not going to suddenly start growing like weeds again. They're mature companies, so they have to get their growth back. I have no interest in owning Amazon at all, unless, of course, they figure out their next leg of growth. You need growth. You need growth. Where's the growth coming from? Is it going to be their AI business? To be determined. So the answer to the question is, let's find out what they do and say about AI, then we'll figure it out. You have to figure out where's the growth coming from and is it going to be profitable growth. Top line growth and EPS growth is what investors will buy, and that's how a company will go up over time. That's the bottom line.
There is one more announcement to be made
Yep.
To everyone at the end, and that's about the 1st of April, and the opportunity obviously before then.
Okay, one final thing of housekeeping, guys, and thank you so much for all your attention, your input, and your dedication to this beautiful community. We have raised prices to £30 a month, which has been in the works for quite some time, and that's obviously due to the fact that this is a growing company, and it was the wrong price to begin with, quite frankly. But those of you who want to get ahead of that, between now and the 1st of April, you can still join for an annual membership for £220 if you want to do that. And all you founding members, as you well know, your prices are never moving, so you can go back to sleep. Anyway, that's a wrap. Thank you so much, everyone. Apex, I love you, and social media, come join us. Namaste.
Thank you, everyone.
Let's do this. Love you guys. Right.